In 1980, two Texas billionaires nearly seized the world's silver supply, spiking prices to unimaginable highs, only to trigger chaos and collapse. Now silver is exploding again, doubling in value within months and fueling a frenzy from Wall Street to TikTok. But the real forces behind this surge are far deeper and far more alarming than anyone admits. Why does silver always become the world's crisis metal, and could history be about to repeat itself? In the late 1970s, a pair of Texas oil magnates set out to do what no one had ever dared: to control the world's silver supply. Nelson Bunker Hunt and his brother William poured their vast fortune into physical silver, quietly amassing an astonishing 200 million ounces, nearly a third of all silver available for trade. Their strategy was simple but bold. As inflation soared to double digits and trust in the dollar crumbled, the Hunts believed silver was the ultimate safe haven. They bought not just futures contracts but physical bars by the truckload, shipping them to vaults from Switzerland to New York. Word of their buying spread, and silver's price shot up from just $6 an ounce in early 1979 to almost $50 by January 1980. That single move multiplied the value of their hoard nearly tenfold, creating instant millionaires and sending shockwaves through global markets. Industrial users panicked. Manufacturers scrambled to secure supplies. On the trading floor, chaos reigned as margin calls triggered a cascade of forced selling. The Hunt brothers, once celebrated as financial visionaries, suddenly faced a new enemy: the regulators. In January 1980, the exchanges changed the rules overnight. They imposed tight limits on how many silver contracts traders could hold and sharply raised margin requirements, making it nearly impossible to keep large leveraged bets open. The price of silver collapsed almost instantly, plunging from $49.45 to under $11 within months. The Hunts' fortune evaporated. They owed billions and declared bankruptcy. Their failed squeeze became a textbook warning about how quickly fortunes can turn in a thin, vulnerable market. For everyone watching, the lesson was clear. Silver is not just another commodity. When confidence cracks, a single player or a single event can send prices to the stratosphere, only to crash back to earth just as fast. The Hunt brothers' gamble did not just reshape the silver market, it forced regulators to rewrite the rules of commodity trading, forever changing how silver is bought and sold. It also left a permanent scar, a reminder that when supply is tight and trust is low, silver becomes a lightning rod for fear, greed, and upheaval. Inflation, banking turmoil, and sudden shortages have all triggered silver's wildest rallies. But beneath the headlines, there is a pattern that repeats almost every time silver explodes. It starts quietly, with institutional money. Hedge funds, central banks, and deep-pocketed investors move first, shifting billions as soon as they sense cracks in the system. Sometimes it is runaway inflation. Other times, it is a geopolitical shock or a mining strike that threatens global supply. These early movers are not chasing hype. They're responding to signals most people miss. Their buying quietly drains inventories, and prices begin to creep higher. Next comes the retail wave. As prices pick up speed, individual investors take notice. They buy coins, bars, and ETFs, often driven by fear of missing out or by warnings about currency collapse. In the digital age, this stage moves faster than ever. Online brokers and trading apps make silver accessible to anyone with a smartphone. The crowd piles in, amplifying every price move. Dealers report product shortages. Social media buzzes with talk of silver being the new gold. Then the media catches on. Headlines warn of silver shortages. Financial commentators debate whether the rally is justified. Mainstream coverage draws in even more buyers, and the cycle accelerates. Prices spike, sometimes doubling or tripling in a matter of months. The story becomes self-feeding. Price gains attract coverage, coverage attracts buyers, and buyers drive the price even higher. But this cycle has a limit. When the frenzy peaks, volatility surges. Regulators may step in, as they did in 1980, or a sudden reversal in broader markets can spark a rush for the exits. The last wave of buyers often arrives just as the rally begins to falter. Three triggers: big money, the crowd, and the spotlight, combine to turn silver from a quiet store of value into a global obsession. Each time, the details change, but the sequence repeats. For anyone watching silver's current run, recognizing this pattern is the key to understanding what is really driving the market and where the next turn might come from. Every piece of the modern world runs on silver, whether or not anyone notices. Inside a solar panel, silver forms the fine grid lines that collect and move electricity, and no other metal conducts as efficiently. Newer cell designs like TOPCon and HJT are taking over the market, and they use even more silver than the last generation. TOPCon cells require between 12 and 16 milligrams of silver for every watt of capacity, while HJT cells push that even higher, up to 20 milligrams per watt. For comparison, the most advanced lab breakthroughs have managed managed to cut this down to just 1.4 milligrams per watt. But those cells are still years away from mass production. Until then, the world is scaling up solar with technologies that are hungry for silver. By 2031, TOPCon is expected to supply more than half of all solar panels sold worldwide. That means the appetite for silver is built into the future of clean energy. Electric vehicles are another layer of demand. Each electric vehicle rolling off the line contains between 25 and 50 grams of silver, more than a traditional gas-powered car. Battery management systems, power electronics, fast charging connectors, and sensors all depend on silver's unmatched conductivity. Multiply that by millions of new electric vehicles every year, and the numbers add up quickly. This is not a passing trend or a speculative bubble. Factories, automakers, and energy companies need silver to keep their assembly lines moving. The demand is structural, woven into the blueprint of the energy transition. As solar and electric vehicles grow, so does the pressure on a supply chain already struggling to keep up. The story now turns from how much silver the world wants to whether there is enough to go around. A handful of mining executives stare at spreadsheets, but the numbers refuse to budge. Nearly 3/4 of the world's silver comes as a byproduct, extracted reluctantly while chasing copper, lead, or zinc. Even with prices soaring past $58 an ounce, those mines cannot simply flip a switch and produce more. New silver projects take half a decade or longer to reach full production. Meanwhile, ore grades slip lower each year, forcing miners to process more rock for less metal. On paper, global mine output hovers between 26,000 and 28,000 metric tons. But demand has already pulled ahead. Inventories, once a comfortable cushion, have thinned to the bone. In early 2025, COMEX warehouses held 80 million ounces. By December 2025, that number had plunged to 43 million, a drop of nearly 50% in less than 12 months. Industrial users and investors now circle the remaining stock, each watching the other's next move. Exchange-traded funds hungry for physical metal have stacked up over 1.13 billion ounces in their vaults. As these inflows set new records, the available pool of silver for immediate delivery shrinks even further. On social media, the story morphs into a frenzy. Algorithms push clips of silver bars and price charts to millions of screens, amplifying every rumor and every rally. Among retail buyers, many between 25 and 40 years old, the fear of missing out becomes its own accelerant. Each price jump fuels more content, each viral post draws in thousands more. The market's heartbeat quickens, supply cannot catch up, the shortage becomes the story, and the story becomes the squeeze. Today, global industry depends on silver more than ever, yet supply can't keep pace. As technology races forward, every device and solar panel raises the stakes. The world's appetite grows, but the Earth yields only so much. What happens next is written in ounces, not headlines. Share your take below.